Hi, good afternoon. This is Jonathan Casares with the USA Gold Closing Metals Report for Monday, April 11th. This is going to be a news service that we're going to be offering on a daily basis just to talk about what happened in the metals market every day, in addition to the news that might have brought about that activity. So today, gold closed down $6 at $1,467.40. Silver ended the day flat, although it reached $42 overnight. So though closing at $40.60 on Friday, it was up big overnight and then basically came back down, closing again at $40.60. Both metals were under some pressure today at different times. Silver actually got as low as $40, but mostly on oil's weakness. Oil was down about $3.75 because there was the feeling that there was going to be a ceasefire and a call for peace in Libya. The South African President Jacob Zuma had said Gaddafi had accepted a plan presented by the African states to bring about a ceasefire. But just in the last maybe hour or so, it was realized that actually wasn't the case, that the rebels did not accept that plan, mostly because Gaddafi actually attacked another town shortly after a supposed agreement had been reached. And so now the call is that there won't be peace until Gaddafi is overthrown. So any of that effect, basically the feeling was that the oil price might come off, oil production might resume out of Libya. That's probably been thrown out the window now, and so you're seeing oil actually spike at the end of the day, and both gold and silver show some buoyancy now as well. Those kind of balanced against two major economic deals. Basically, crisis averted in the United States as we avoided a government shutdown over the weekend. There was a lot of buildup in the price, probably as a risk trade a little bit there, as people kind of wondered what was going to happen if the government did in fact shut down, which it didn't. It's interesting though, basically we've got two much bigger problems brewing when it comes to government finances here, and that's whether or not we're going to raise the debt ceiling and also coming up with a budget for fiscal year 2012. So a lot of this stuff around 2011 is really fighting over you don't want to call it pennies, but small amounts of money compared to the real problems that we're dealing with and real problems that are probably coming here down the pipe. Also, what's going on in the Eurozone is affecting gold, specifically with Portugal. Portugal has and will be seeking a bailout, it looks, of 80 billion euro. They're going to be working with the European Union and the IMF this week to kind of try to settle out that bailout and what it's going to mean, the austerity measures that are going to have to be accepted with it, and so forth. It's really interesting though because the European Union raised interest rates last week, which people are kind of critical of that, saying that how are these pigs nations going to be able to grow? It's basically these two competing forces. You have the fear of inflation in the Eurozone, hence the rise in interest rates, but that's being combated with the need for these these pigs nations, Portugal, Italy, Ireland, so forth, and their ability to grow out of the sovereign debt risk, because raising interest rates is going to curb some of that growth. So these two competing forces are leading to a destabilized situation in the Eurozone, increased risk of sovereign debt defaults, which is obviously affecting gold and the metals positively. So we'll conclude with that. That was the daily report. For everything gold, up-to-the-minute news, information, and market analysis, visit us at usagold.com. See you tomorrow.